All right, let's dive right in. I know, it's been exciting seeing all those green candles on the charts lately. It's easy to get swept up in the hype. But we've got to remember, bear markets are absolutely brutal. They are designed to fool everybody. So today, we're going to break down a pretty fascinating historical pattern that suggests maybe we should tap the brakes a little, because history might just be about to repeat itself. So this leads us to the billion-dollar question on every single investor's mind right now. Was this rally we just saw in March the real deal, the start of a new bull run, or was it just a classic bull trap designed to lure everyone in before the next big leg down? Well, this whole explainer is dedicated to unpacking the data to find an answer. The core idea we're digging into today is something called the April window of weakness. It's a thesis that says in these crypto midterm years, the market has this uncanny habit of giving us a really hopeful, exciting rally in March, only to pull the rug right out from under us in April and May. Okay, so why should we care? Why is this so important? Well, because what we're seeing play out right now isn't new, not at all. In fact, if you look back at the history, it feels like we're just watching a simulation, a script that is played out again and again and again. Let's just look at the evidence from past midterm years. Take 2014. You get a low in February, a nice bounce in March, and then bam, a new, even lower low in April. Then you've got 2018, same script, some promising strength in March, followed by total capitulation in early April. And what about 2022? A late March rally that just led straight into a painful bleed out for the next 2 months. You see it, right? The pattern is, well, it's kind of eerie. And we're not talking about little dips here. These were serious portfolio-crushing drops. In 2014, Bitcoin fell 25% during this window. In 2018, it was even worse, a 33% fall. And in 2022, a staggering 40% loss. This data just screams how dangerous this period has been for anyone who gets a little too optimistic. So if the pattern is so clear, you might be wondering, well, why doesn't it feel like a classic bear market to everyone? And that is a fantastic question. The reason is the type of market top we experienced this time around. This cycle's signature wasn't wild euphoria, it was just apathy. And that changes everything. Think about it. A classic euphoria top, that's a dramatic crash. It's a 70% nosedive in just a few weeks. It's fast, it's violent, and it's obvious to everyone that the party is over. But an apathy top, that's completely different. It's like a slow leak in a tire. It's a painful, grinding bleed out. It's deceptive because you get these little relief rallies that give you just enough hope before, whoop, a slightly lower low. It's designed to wear you down mentally. And this shift in the market's personality has some really critical consequences. That key price zone that held Bitcoin up, the floor during the bull market, has now completely flipped. What was once solid ground is now a massive, massive wall of resistance right over our heads. And we can actually put a number on that wall. Right now, that level is sitting around $80,000. Think of that as the new gatekeeper. Until Bitcoin can decisively smash through that price and stay above it, the data is telling us that any rally is probably just a trap, an opportunity to get out before the next move down. But it's not just about Bitcoin's chart. We have to zoom out and look at the bigger picture, because there are some huge macroeconomic storm clouds gathering. The Federal Reserve, the guys who control the money printer, they are stuck between a rock and a hard place right now. You can seriously think of their situation as a game of chess where they're in checkmate. On one side of the board, you have a weakening job market, which is screaming at them to cut interest rates and help the economy. But on the other side, you've got energy prices spiking, pushing inflation up, which demands they keep rates high. They are completely and utterly trapped, unable to give us that cheap money that risky assets like crypto absolutely feast on. And this really gets us to the heart of the problem. The source material puts it perfectly, and you really need to hear this. Until we see a regime shift in liquidity or a total reset of the business cycle, Bitcoin will likely continue to struggle. Basically, until the Fed turns the money printers back on, or we have a full-blown recession to reset everything, Bitcoin is fighting an uphill battle. Okay, so we've got the historical pattern, we've got this weird apathy top, and we've got major macro headwinds. What on earth are we supposed to do? How do you navigate this potential window of weakness? Well, the focus has to shift from chasing moonshots to just simple survival. We can use data to find some clues for a potential bottoming zone. There are two huge on-chain levels you need to watch. First is the realized price, sitting around 55K right now. Then there's the balance price, down around 40K. Now here's the kicker. Historically, a decisive crash below these levels has been a massive flare, signaling that a true market bottom is in, or at least very, very close. So those are the numbers to watch. So all this boils down to a pretty simple 3-step survival plan. Step 1, be realistic. Please don't get sucked into supercycle fantasies just because of a few green days. Step 2, and this might be the most important, preserve your capital. Just making it through this midterm year with your portfolio intact is a huge win. And finally, step 3, practice patience. The time to get aggressive will come in the next expansion phase. For now, the name of the game is survival. Look, none of this guarantees the future, right? But it does give us a powerful roadmap of what could happen next. The key takeaway here isn't about prediction, it's about preparation. So the final question I'll leave you with is this. If this window of weakness does play out, if it does present a once-in-a-generation opportunity later this year, will you have the capital and the courage to be ready to act?